Our market monitor expects lots of noise and volatility to drive the markets over the next few months, but he says fundamentals are key to getting from point A to point B in the long run. He's Don Wordell, portfolio manager at Ridgeworth Capital Management. Don, welcome. Good to have you with us. You expect volatility to pick up? It's been very, very low over the last month.
Well, I mean, I guess the more important thing to know is, like you said, fundamentals will get you from point A to point B, but there's always going to be some bumps along the road. Like we experienced over the last 5 months with the polar vortex and some geopolitical unrest that always seems to strike fear into market participants.
You have a couple of stocks that you think are going to do well in this world that you just described. You said that 3 things are guiding them. Tell us what they are and tell us why you like Ameriprise.
Sure. So for a stock to get into the portfolios that we manage at the Ridgeworth Mid-Cap Value Equity Fund, stock has to have 3 things: dividends, valuation, and fundamentals. When all 3 of those come together, like they do for Ameriprise, that's a stock that we have a big position in. Ameriprise has a 2% dividend yield. The company's valuation is very attractive relative to other asset managers. Some folks would say it's a life insurance company, and true, historically it has been, but the asset management, wealth management part of the business is growing, and so the company is going to get a higher multiple for that better return business, and we really expect the productivity of their sales force to improve, and we also are expecting some very solid flows to begin in their asset management business. And so we really think that there's a material upside in this stock over the next 2 years.
A second stock that you like, in fact, that you think, as these other 2 that we'll mention here, can grow 25% over the next 12 to 18 months is Cigna. Why?
Well, Cigna, I think, is one that could experience some volatility, but at the end of the day, patient investors will be rewarded. As the market gets comfortable with the move to the exchanges model, where you have private exchanges and public exchanges, and we bring all of these people into the healthcare system, this is a company that's going to do great things. Their dividend is small at this point. We expect that to grow over time. They've done a complete restructuring of the business by selling some non-core assets and buying back shares. And we think that the ultimate earnings power of this company is well above what the street has modeled. And so I think that these companies, all these managed care organizations, whether it be United, Aetna, WellPoint, et cetera, we think they're all going to re-rate higher as they get more stability, more consistent quarterly reports, and that's why we think Cigna can do very well from this point.
Ingersoll Rand is another one on your list. It closed today at $58. Tell us why you like it, and where do you see the stock closing down the road?
Yeah, sure. So Ingersoll Rand is a different animal in that this is an industrial company. They've done some really great things. Again, our process is dividends, valuation, fundamentals, and so the company has roughly a 2% dividend yield. The valuation is in line with its peers. But we think the fundamental story is the expected cycle in front of us for construction, whether it be residential or non-residential. Ingersoll Rand makes air conditioning, HVAC equipment, and we think that their products are positioned great. We think that we're on the front end of what could be we're beginning to see the grass green shoots, so to speak, of a non-residential construction cycle. We think that housing will continue to build, and and they're going to do some non-core things there as well by moving some businesses out and into this company and buying back stock. Got a ton of cash to grow the dividend and buy back stock. So we're really encouraged by what we see there and think that Ingersoll is going to do well at least over the next 12 to 18 months.
We have to leave it there. Any disclosures on these stocks? You mentioned that you did own, or your company owned, Ameriprise. I assume you have money in the other ones too.
Well, my ownership of these is through the ownership of the mutual fund, yes.
All right, Don, thank you very much. Don Wordell with Ridgeworth Capital Management.